Okay, welcome back everybody and thanks for joining us. The event organisers have just asked me to make a couple of quick housekeeping announcements. Firstly, the winner of the Minarch Systems business card draw for a Garmin watch is Bart Jessania, I hope I've got that right, from Resolve. Please collect it from booth 77. And then secondly, the winner of the BASF business card draw for a bottle of Penfolds Bin 389 is Adam Smith from Liontown. Please collect from booth 140 or contact Brett Beswick. Thanks very much. Okay, that's right. So I'd now like to introduce Mark Stryzek, Executive Director of Tietto Minerals. Mark has more than 20 years' experience in gold exploration, resource development, open pit and underground mining projects across the Eastern Goldfields and West Africa. Prior to joining Tietto, Mark was MD of ASX-listed Vital Metals for 7 years, and since joining Tietto, Mark has been instrumental in growing Tietto's 3.4 million ounce gold resource, which is now firmly on track for a much anticipated DFS later this year. So please join me in welcoming Mark Stryzek.
Thanks, Digby, and thanks to the organisers for giving us the opportunity to talk about our project. As it says, we are on track for West Africa's next gold mine. At the start of the week, you heard from Richard Hyde and the excellent job that he's done there in bringing Sanbrado online, and I think that gives you a bit of a feel as to where we intend to take Abidjar. So some disclaimers there, there's forward-looking statements. So as it says there, fast-tracking Abidjar. We are certainly a company that we listed in 2018. We're moving very, very quickly. We're in Côte d'Ivoire, which we think is a great destination for mining, and obviously you see some of the majors there with Perseus, Endeavour, and also Barrick with Tongon. We are growing our resources. We recently announced an upgrade to just under 3.4 million ounces, and that included a significant component of indicated uplift. And that resource model is going to be used for the DFS. We also delivered a PFS that came out in April this year, and that used a model from last year, from October, and look at very, very healthy results. We could see 200,000 ounces in the first year. The DFS, as Digby said, it is eagerly anticipated, and it's on track for the end of this quarter in September, and that will use this new resource model. We've been able to get a line of sight to building this project. We've been able to tick off the environmental approval. We've secured a mining licence. We're working on what's called a mining convention. One of the keys, and it's probably in our blood, is self-reform. And you've seen the job that Regis and the Capricorn team have done. And we've been able to secure Matt Wilcox, who built and managed the build at Sanbrado. And we'll talk about it, Matt and his team. We're also well funded. We've got 45 million in cash, and that allows us to execute our strategy. So we've got two prongs, the development phase and also exploration. We're managing to keep that going very, very aggressively. So just a little snapshot there. So I think we did a raise last year. All of the directors are shareholders. Directors put in $1 million in the last raise at 62 cents. I think the key really is the enterprise, the value that's on offer here as you look at what we're going to be talking about in terms of the DFS and where this can go when you've seen where someone like West African's been able to take that project. The directors holding 7.5%. So that's Kagan, the founder, mining engineer, worked here at WASM, worked in the goldfields in Kalgoorlie. Actually, when he first arrived to supplement his WASM salary, he was actually picking up glasses at Judd's there. So we've all been in Kalgoorlie. Francis is money man, so there's a linkage there with West African. He founded the chairman there, and then Paul and myself have been managing directors of West African companies. Hanjin worked with Jake Klein. Research, Canaccord, Paul Howard, Euroz and Foster. So as we talked about, Côte d'Ivoire, look, it's a great destination. As you can see, there's some majors there, Endeavour, Perseus. And you can also see where we are, right in the middle there. Great location for infrastructure. Côte d'Ivoire, it's a very sophisticated economy. Mining only makes about 2%. It's a young workforce. The economy's been growing double-digit for the last 10 years. We've got access to very cheap green hydropower. And the government has a stated aim to try and increase the amount of mining. And as you can see, there's a lot of discoveries to be made. So all of the work, it doesn't happen just by itself, and we've got a fantastic team on the ground. You can see there on, it's on my right. That's the exploration team led by Mr. Yaya. They're 3.5 million ounce discoverers. You don't get to do that every day, and that's the opportunity that's on hand here in Côte d'Ivoire. We're also developing some early works. You can see there the dozer upgrading our exploration road that would be used for the mine access. We're also in the middle of doing some hydro work for the DFS. What I want to talk about here is one of the things that really differentiates Tietto. We run our own drilling rigs. Look, it's the reason we've done that is that so often you're in that cycle as a junior, you've got great targets, you just can't go after it, or you get caught in that cycle of having to raise money, having to stop. We've got 6 drill rigs that are working for us. They're diamond rigs. You can see they're very low footprint. With that rig there, we can still drill down to 720 metres. The savings to our shareholders, they're astronomical. You can see there we've drilled over 150,000 metres of diamonds since buying our first rig in 2018. And if we assume a contract cost, like for like, a comparative cost at $150 US a metre, we've saved our shareholders just under $17 million. So it allows us to really go at it very aggressively and not depleting the bank. So as a result of those drill rigs and the targets that we've got on foot, we've been able to grow our resources very, very quickly. You can see there that's really fresh from July this year. We've got 1.85 million ounces of indicated. And the key there is the DFS. That's the new model that's going to go in there, and you can see that we've significantly de-risked the resource. We're up to 1.85 million ounces of indicated. And that's what's going to flow through the DFS that's coming out in September. Just a little snapshot on the project, diving down where the resources are coming from. As you can see there, we've really only just touched the surface. We've got two deposits, AG and what we call APG. So you're seeing the development of a mine camp. We've got 70k of strike length outside of that as well. We've got those 10 drill rigs, the 6 drill rigs, drilling at $35 a metre. A little snapshot on APG. This is a long section. You can see some of the grades there on the left. Good widths, very high grade. We've converted that into the pinks and magentas, what you need to look for. Lots of high grade right at surface. So that's the key for starting this project, is that AG, there's relatively high grade right at surface that will allow us to achieve that target of 200,000 ounces. And you can see that resource is still open at depth. And we're currently drilling the indicated to measured. APG, it's about 7.5 k's down the road. Unlike AG, it is it is lower grade, but it's quite a large system. But it has oxide, so it offers a low strip end of life feed. In terms of what comes next on the drilling, remember that those drill rigs are active. We've got within 10 kilometres of where the process plant is proposed at AG, we've got round about 20 targets. We've got that 70k of strike length, so we're going to be busy for many, many years drilling out and adding resources at Abidjan. So just zooming in onto the PFS, it was based on 3.5 million tonne per annum. That used the resource model from last year. So it's a little bit out of date. You can see there that we've got around about 860,000 ounces of probable reserves, and that was inside an inventory of 1.1 million ounces. So with the drilling that we've been able to do, we're presenting a new resource model to the mine optimizers, and we expect to see a significant uplift in those resources. As we said, we've got all the mining and environmental approvals. And we also, as part of that PFS, because we were well through a drilling program, we talked about an expanded project that could see us just under 1.5 million ounces, and that's really where we see the DFS going. So that's on track, and the key here is that we've been able to significantly increase that indicated, so we've got a good basis to really grow the reserve base. In terms of the study, it's very conventional. It's CIL with a significant gravity component. The ore is undemanding. We've got approval for 30 million tonne tailings in the first stage, and we've got plentiful power down at Deloa, where we're going to be putting in a 90 kilovolt power line. Metallurgy, it's just worth touching on this. We have exceptionally high gravity. We've completed the full suite of metallurgical test work in the DFS. We've got high CIL. The ore will be milled and crushed at a very coarse size, up to 115 micron. And the energy inputs are very, very low, around about 12. So this ore is very undemanding, and it means our processing costs are going to be very, very cheap. In terms of the PFS, we had around about $150 million worth of plant and infrastructure, and there was around also some pre-production mining in there as well. Operating costs are pretty attractive, $9 for processing, $23 a tonne on ore. As we look at the DFS, we've been able to secure an unused 4 million tonne per annum mill that will do 4 million tonnes on fresh. We'll be incorporating some upside in terms of oxide trans throughput, and we will be seeing lower processing costs. So we've been able to build on our PFS and identify a number of enhancements, and that's coming up. In terms of the project, the economics, this is where we think the DFS will land, somewhere to these numbers. You can see currently at 1,800, we've got free cash for 10 years at over $70 million a year. So this is a very attractive project. You can see on the bottom that early payback, and we see, as you saw from that potential resource base, the opportunity to significantly add reserves to this. So the key is having the right people to build the project. We've been very lucky to attract Matt Wilcox, who did a fantastic job for Richard Hyde at West African. He's also built Bulli and Bissa. We've also been able to secure a number of key people you can see there, Guillaume, Daniel Hesbin and Beatrice. So we have an owner-builder team to help manage and to drive that timeline and control the costs on the build in this project. Look, this slide I've taken from Orezone, and if you can see there in the highlight, that's 3 of the projects that Matt and his team have been associated with. It does say the gold standard in project execution in West Africa. It's been exceptional, and we hope to add Abidjan to that list as well. So the current development timeline, we're targeting first gold in Q4. We've got a few things to do ahead of that. So the DFS coming up at the end of this quarter, and then we are in discussion with financiers. This project looks very attractive, we believe, to secure a good debt funding package. We've been able to secure some early works. As I said, we've picked up a 4 million tonne per annum mill, and we've also been able to do some early engineering as well. So we're well moving ahead on the timeline. One of the other things that we have been able to do at APG, there's some lower grade material. We see potentially an opportunity down the road to add further capacity into the project from some of that lower grade that's sitting around APG. This is very similar to what Nordgold did at Bulli and Bissa. Matt was involved in that as well. So early stage, need to do a lot more work, see where it lands. So look, that's us. It's a very simple story. We think there's a very incredible value proposition. We're growing that resource just under 3.4 million ounces. We're also aggressively drilling at an incredibly cheap price compared to our peers, so it allows us to really go at it. We've got funding in place. This is a large-scale open-pit opportunity. It's sized similar to the Yaouré project. So for our first attempt, I think it's going to be very, very successful and looks very attractive. There's a lot of news flow coming up. We've got the DFS and further drilling as well.
Well done, Mark. Just one question from online before we move on. So, following Cardinal Resources takeout, is there the chance of further M&A in West African developers and producers?
Look, I think it definitely is on there. We're really committed to building it ourselves. We've seen the value that West African have created from that simple build a gold mine and create incredible value for shareholders. That said, there's been a lot of interest in West Africa. You've seen the Cardinal takeout. You've also seen Endeavour rapidly acquiring and growing into a big gorilla up there. So, look, it could happen, but we'll see.
Excellent, well done. So please join me in thanking Mark Stryzek.
Thanks very much.